If you're working outside India but still collecting rent for a flat in Mumbai or supporting your family back home, which accounts should you use? Most people would guess NRO and NRE both. But is it really the right answer? Do you actually need an NRE account or you're just following a combo offer from your bank? Hi everyone, I'm Sagar Soman, a chartered accountant and cross-border wealth strategist. Over the last 20 years, I have advised NRIs on cross-border tax and compliance matters across multiple countries. My work focuses on NRI taxation, FEMA and DTAA frameworks, and I'm currently working as an independent consultant with Belong to help you navigate these complexities. You're watching another episode of the Offshore Advantage, where we simplify global finance for the Indian diaspora. Today's topic is about NRE versus NRO versus FCNR, why these are not just bank accounts. Let me start with something I see very often. An NRI walks into a bank or speaks to a relationship manager and is told, almost like a combo offer, Sir, NRE and NRO are both required. We will open both because the KYC is similar. NRE and NRO are sold as a set. And here is the honest truth that most people don't say out loud. In many cases, an NRI does not need an NRE account for day-to-day India expenses. If your India use case is mainly family maintenance and domestic expenses, and you are not remitting overseas income into India to build repatriable balances or investments, then a properly structured NRO setup is often sufficient. So the most important question in this entire topic is not which is better, NRE or NRO. The most important question is, do I even need an NRE account? Now let's build this from first principles because this is where most confusion starts. In India, FEMA comes first, income tax comes later. FEMA answers one basic question. What are you legally allowed to hold and operate in India once you are a person resident outside India? Income tax answers a different question altogether. Once something is permitted under FEMA, what is the tax impact? And remember, income tax residency is tested separately from FEMA. So you may be a resident under one but a non-resident under another law. Many NRIs reverse this. They start with tax convenience and then they try to justify the wrong account structure under FEMA. That is exactly why you hear statements like, I did not convert my saving account to NRO because TDS is higher on NRO, or someone told me that it is not needed at all. We will fix that misconception today. In common language, we keep saying NRI, but under FEMA, the real concept is whether you are a person resident outside India. Once you are a person resident outside India or a PROI under FEMA, RBI rules permit you to maintain specific category of accounts and deposits in India. Now, one more clarity before we go further. NRE and NRO are just bank account categories. FCNR is not a bank account. FCNR-B is a term deposit maintained in permitted foreign currency. So I will explain NRO and NRE as accounts and I will explain FCNR separately as a fixed deposit category. Now let's start with NRO because for many NRIs, NRO is the real operational account. NRO means non-resident ordinary account held in INR. In practical terms, NRO is meant for India-linked money. Imagine you are working in Singapore, but you still have a flat in Mumbai that gives rent every month, or you have a pension credit in India, or you have local receipts like maturity of PPF credited in India. That money is India connected, and that is why NRO becomes the natural home for those credits. Also, if you are an NRI and you want to maintain an account in India for family expenses, domestic payments, and routine maintenance, the NRO account is the natural base account for that purpose. Now, outcomes. First, interest on NRO is taxable in India. Second, the bank is required to deduct TDS on NRO interest. The withholding is mandatory. Only the rate can vary depending on PAN and treaty documentation. Now, this is where people get misled. Many people feel that NRO has high tax. That statement is technically wrong. What feels high to people is the TDS rate, not the final tax rate. Tax and TDS are not the same things. Tax is your final liability after your total income is computed and the relevant provisions are applied. TDS is just tax withholding structure. It is a collection mechanism and it can be deducted even if your total income is below the basic exemption limit. So when TDS is deducted by the bank, it does not mean that that is your final tax outflow. Your final tax is determined when you file your return and compute your actual liability, including DTA relief where eligible and properly documented. So there can be three scenarios. If excess TDS has been deducted, it can result in a refund or adjustment. If correct TDS has been deducted, it gets absorbed in your final tax liability. If lower TDS has been deducted, you pay only the balance amount, whatever is outstanding, along with interest if it's applicable. So choosing or avoiding an account category only to reduce TDS is not sound reasoning, because TDS is not the final outcome, it is only withholding mechanism. Now the second outcome in NRO account. Repatriation of funds from NRO is permitted, but it is controlled, subject to applicable limit, which is the $1 million limit, and conditions and documentation driven. So, if your plan is to freely move large balances abroad later, NRO is not a no questions asked channel. Banks typically require declarations and remittance paperwork, such as Form 15CA, which is self declaration, and where applicable, Form 15CB, which is the CA certificate, depending on the nature of the remittance. That is why some NRIs feel that NRO money is stuck in India. It is not stuck. It is repatriable, but it is not a free flow channel. So that's all about NRO account. It is the account category for India linked flows, domestic expenses, and regular India side operations with mandatory TDS on interest and controlled repatriation. Now let's come to NRE. NRE means non-resident external rupee account. In simple terms, NRE is meant for funds sourced from outside India and held in INR. So if you are working abroad and you want to remit money into India, that remittance is external money. Now here is where the earlier question becomes important. Do you even need an NRE account? If your India life is mainly about managing India linked money and paying India expenses, then in many cases an NRO account alone is sufficient for that purpose and NRE is optional. A properly structured NRO setup can do the job for family maintenance and domestic expenses. But if you are remitting overseas income into India and if you want those overseas sourced balances to remain repatriable, or you are building an India investment base using overseas funds, then NRE becomes relevant because the design intent of NRE is to hold external funds in INR form within the permitted non-resident framework. Now let's talk about the outcomes. Outcome number one, NRE is generally used because repatriation design for eligible balances is cleaner compared to NRO, subject to permitted rules and banking procedures. Outcome number two, interest on NRE has a specific exemption posture while you remain eligible as a non-resident and conditions are met. But I want to be very precise here. Interest exemption on NRE does not mean everything becomes tax free because I used NRE for initial investments. Now I want to address one serious compliance error I see repeatedly. Some NRIs say I'm not converting my resident saving account to NRO because the bank will deduct higher TDS on NRO account. This is the wrong approach for two reasons. First, it misunderstands TDS. As I explained, TDS is not the final tax. It is a withholding mechanism. You don't design your legal banking structure just to avoid withholding of tax. Second, it ignores FEMA permissibility. Once you become a person resident outside India under FEMA, you are not permitted to continue maintaining a resident savings account in the same manner. The account is expected to be redesignated to the appropriate non-resident category, typically NRO. So even if someone is tempted to keep a resident savings account because the TDS is lower, that does not make it permissible. FEMA comes first, tax mechanics come later. Now let's come to FCNR. FCNR is not a bank account. FCNRB is a foreign currency fixed deposit held for a fixed tenure under the non-resident deposit framework, mainly to avoid the currency depreciation and parking your funds in foreign currency. You do not use FCNR like NRE or NRO for routine credits and debits. FCNR is used when an NRI wants to park funds in foreign currency in a fixed deposit structure rather than converting his deposits to INR. So NRE and NRO are operating account categories. FCNR is purely a deposit category. Now let me summarize the decision framework in a very simple way. First question, what is the nature of your India financial life? If your India activity is mainly family maintenance, local expenses, rent, pension, and India linked receipts, then an NRO account is the core operational account. In many such cases, NRE is not required at all. Second question, are you bringing overseas funds into India and expecting repatriation friendly outcome on those overseas sourced funds? If yes, that is where NRE becomes relevant as part of your structure. Third question, are you confusing TDS with final tax? TDS is withholding structure, not final tax. So never use TDS convenience as the reason to keep the wrong FEMA account category. FEMA penalties can be very severe. And remember one more clarity, NRE and NRO are bank accounts, FCNR is a foreign currency fixed deposit account. If you remember only 3 lines from today, remember these. FEMA decides what you are allowed to hold, start there. In many cases, NRO alone is sufficient for routine India expenses and family maintenance, and NRE is not compulsory unless your use case needs it. And TDS is not final tax, it is withholding. Final tax is determined when you compute and file your return.